about to get started here in just a minute. It's a great time to get your drinks. We do have some sponsors in the back that I to give you recognition. First off, Thrasher's our event sponsor tonight. They have 3 books in the giveaway pile. We had a couple people return. One book is, I'm going to come over here. We got a mini Rich Dad Poor Dad provided by JM Real Estate Capital. We have a Rich Dad Poor Dad that we gave away a while ago, and Amber Best brought it back. So we got one of those to give away. And then we got Real Estate by the Numbers by Jay Scott. And I got this book down in Bigger Pockets. But there's only 2 cards in the book in the box, and we have 3 cards. We have 3 books to give away. So if you're interested in one of those books, throw your card in. We will give a drawing at the end of the event. Over here we got Ben. Ben, give us like 1 minute here. Tell us what you got going.
We do custom egress window wells. Custom egress windows. My window is a tilt and turn window. It actually opens to the inside of the house, which is very different than everybody else's. Let me know if you need any egress windows, and love to talk. Thank you.
So he's got cards over here. He's got brochures over here. He's got some samples. So come talk to Ben. He's been a part of the group for quite a while. Kevin came down here all the way from Texas. What part of Texas, Kevin? Dallas, Texas. And he's with Servant Flooring. He's got all different types of flooring for you guys' properties at $1.29 a square foot. That's the cheapest I've heard in a long time. You want to give us a quick little overview of your company?
Sure. Yeah, we import directly from overseas by containers. So we import flooring. We're importing about 100 containers of flooring this year, and we have the best price on a luxury vinyl flooring at $1.29 in the nation. Also, we sell white shaker cabinets that we have the best price on those in the nation also, because we import and sell directly to the end user.
Thanks, Kevin. Oh man, we got Rob from JM Real Estate Capital. Rob, what kind of real estate are we doing here? What's the rates that we're seeing on some financing? And tell us about construction loans, which is one of the things that's most common I get asked about.
Well, we're still in the high 7s for a 30-year fix. Not bad. 30-year fix, exactly. High 7s. For a new construction, 10, 12%, 80 to 90 loan to cost. Not bad. Not bad. And by the way, if you're a beginner, don't be afraid. We lend to your beginners too.
So if you're a rookie and you come down here and you've never done a real estate deal and afraid that you're not going to get the money, Rob's got you. And did you guys get 7% on a 30-year fixed? I'm telling you, I'm not seeing those rates anywhere else. So awesome. Thank you. Appreciate it. Okay, let's get this ball going. Okay, so it's last call to fill up your drinks. Also, if you haven't had the chance to yet, this is definitely the time to get your parking code figured out. Okay, are we live over there? You guys good? Okay, do you want me to be on the other mic or this mic? Okay. Okay. Travis Banks. When we go up. Okay, thank you guys for your patience tonight. Love seeing all your faces. My name's Ted. I run the Omaha REIA with my wife Jessica, which you probably met her at the front desk in the yellow sweater. So if you guys could, one thing we've never done, if I could get everybody say thank you, Jessica, on 3. just an old sponsor. He works with over 20 different insurance companies. I know a large amount of percentage. I think at one point he said about 40% of our REIA group uses him. So I appreciate that. That's just the power of what we do, keeping it local, which I love. But thank you to Blackstone Insurance for renewing for a third year. And then tonight's event sponsor is Tom Bilyeu. And Tom, you want to come on up here? So Tom is with Thrasher Foundation Repair. Some of you guys know I worked at Thrasher for about 5 years. They have a great reputation. They have great products. If you want to, I know if you're buying a property and somebody says another company, which I'm not going to name drop, comes in, like, I don't know. I'll leave it there. But and waterproofing's done or the foundation's done, you know how sometimes they look at it and like, okay, well, is it done right? But when you say there's a Thrasher system in there, there's a little bit higher level of security because you feel a little more confident in the work because they know that they paid to get it done right. So with that, I'd like to introduce Tom. Tom is the guy that when my family had an issue with their house, we called Tom. When I was in the field working, Tom was the guy we called because he knew everything at it. He's been with the company for over 30 years. And when it comes to working with investors, he's the one I refer out also because he's the one that's not out there price gouging. He's telling you it real on how it should be. And he takes the phone calls right to his cell phone. Nobody else in the company does that. So I'd like to give you a big round of applause for Tom.
Thanks, Ted. I appreciate it. Yeah, just to introduce myself, my name's Tom Bilyeu. I've been with Thrashers for going on 35 years now. Started out as a laborer, moved up to foreman, production manager. Spent about 25 years in the residential sales for all of our products. And about 4 years ago, I started another position for Thrasher called a property advisor, where I just work with real estate transactions, investors, property managers, and that sort of thing. And the whole idea is for you guys to call me directly. It doesn't go through the office or anything. I can go out there and usually get it looked at within 24 hours. If it is something that we can help you with, I'm going to give you a computer-generated proposal, tell you exactly what it's going to need to cost. The cool thing about it is if it's something where the issue is really you need to build the grade up, you need to extend the gutters. That's your, gutters, grading, and downspouts is a holy trinity to our business. You got to start there. If you don't do that, then that's when we come into play. But I'm not out there to give you a full-blown presentation on anything. I'm just going to tell you like it is, good, bad, or indifferent. It's not my house. I don't care what your problem is. I can tell you if we can fix it or not. If we can, I'm going to give you a price. So the whole idea, again, my card's up there. Please stop by. We're pushing the bags tonight. Everybody grab a bag. Yeah, every kid needs an extra bag, I guess, nowadays. And my cards are also, like Ted said, it has my direct cell phone on there. You call me or text me. Emailing is okay, but I have a lot of security on my laptop. And if I don't recognize it, sometimes I delete it because I've hit the button before and had some guy try to sell me a couple $100 worth of it. Couldn't get him out of my computer, so I took it someplace. So just being honest with you. Text me, call me. All right. I appreciate Ted for reaching out again and having us be a sponsor. And really, I just enjoy doing this. And like I said earlier, it's not my house. Not my house. I'm going to tell you like it is. Good, bad, or indifferent. So, all right. Thanks, guys. I appreciate it.
Appreciate it, buddy. I mentioned a handful of times, but at the end of the event, there's a bucket on Tom's booth over there, and there's 3 books in there. Rich Dad Poor Dad by JM Real Estate Capital over there. Rob provided it. We have another book, Rich Dad Poor Dad, that we gave away. Amber Best brought back. So we did our recycle program. So thank you, Amber, for that. And then we also have Real Estate by the Numbers by Jay Scott and Dave Meyer. We got that down at the Real Estate Conference. So just throw your card on there. We'll pick a card out at the end and we'll give those away. They're free. all we ask is that if after you read it, if it is impactful to you, bring it back, put your card inside of it, and let's give it away again. So that way we have more stuff to give away. So we appreciate it. Tonight's drink sponsor, if you don't have never been here, you don't know what a drink sponsor is, after the event, we go to Burger Theory right across the hallway. You don't even have to go outside. And the first round of beers is taken care of by DBG Realty. And so thank you to DBG Realty for doing that. They're a real estate investment brokerage. So we appreciate you guys in doing that. But definitely take care of the drinks. We find that the best interactions, the best deals, and the best talking kind of happens at those events. If you do the after hours, can you raise your hand? Have you guys done it? Oh man, so we only have like 5 people do it, obviously. I know all you guys should have your hands up. Speaking of hands, it's kind of good to know who's in the room. So first off, I'd like to welcome the visitors. If you're a first time here, can we see your hand so we know who you are? Man, okay, so we got a handful of you guys. There we go. Appreciate it. I like that. It's good to know who's around you, and for that reason, we ask the questions of what people do in the room, because maybe there's something that you want to do as a real estate investor, or maybe you're here for another reason, but you want to talk to somebody doing what you want to do. And everybody in this room that I personally know gives their information away for free, including myself. I can't tell you how many conversations I've had just this week educating people. So I'm going to ask the group, if this is something that you do, please raise your hand so that a lot of the visitors in the room can know what you do. But if you are a multifamily owner, can you raise your hand nice and high? If you do commercial real estate, can you raise your hand? Who does Airbnbs? Anybody do Airbnbs? What about midterm rentals? Anybody doing midterm rentals? Who's doing creative financing? Any creative financing out there? Subject to financing? Yep, I see some waves there. I figured there'd be a few of you in the room there, Travis. Who does trailer parks? Anybody in trailer parks? I don't. Bueller. I always get in trouble. What am I supposed to say? RV parks. Oh, RV parks. How about RV parks? Anybody do RV parks? How about storage units? Any storage unit investors? 1, 2. Sean made it all the way over here from California. So thank you, Sean. I appreciate that. And you just got a 22 unit, so congratulations on that. If you want to know his story, he was on our REIA radio podcast, episode 97, I believe. Yep, so definitely check that out. How about out-of-state investors? Any out-of-state investors in the room? Where's our flippers? Any flippers? Yep. And what am I missing here? There's got to be another type of investments I'm missing. How about wholesalers? Anybody willing to say that they're a wholesaler in the room? I'd like to know. There's rules with that, so you can get away with it legally, just so you guys know. So it's not a bad word to say. Any contractors in the room? Any contractors? What about contractors that are looking for business? Can you put your hands up? Because usually all the hands go down. Is that changing nowadays? Are the contractors actually looking for business again? So visitors, you guys got get an idea of who's in the room? What are you here for? I saw your visitor hand. Checking out. What do you want to get involved with? Land. Okay. Landowners. Any landowners in the room doing land investments? Weegians right here. These are the guys to talk to. Talk to these guys. That's awesome. Any other visitors in the room? I saw a whole bunch of hands a minute ago. What are you looking for? No? Everybody gets shy now. If I didn't see your hand. What about you guys? Yes, what are you looking We have over 5,000 people on our local Facebook page. You can ask pretty much any question in there. The only rule I have is don't self-promote if you're not a sponsor. I don't want to see you throw all your stuff on there and say, hey, I'm looking to sell this. If you're a real estate agent, you can post it if it's an investment opportunity, but just post the specs and why it's an investment opportunity. Hey, this is a potential rent I'm going to get. Or, hey, I got an investor that's looking for this specific type of property. Can you help me out? I'm cool with that. But if you're going to just throw your company logo on there, hey, I'm a tree removal company and this is what I do, that's not the place for it. But if somebody asks for a recommendation for a tree removal company, then post freely underneath it. You know what? And guess what? If somebody says they need an egress window, I'm going to take the safe exit ad that I created. I'm going to pop it so you can see it and see the discount you get. Because between local sponsors and national sponsors, we have over 45 sponsors that are now providing you guys discounts for the $100 a year that you pay. So that's some of the value that we bring. I talked way more than I normally do, so I'm He's our producer, and now he sits at the table with us. We're so excited. We had to get a bigger studio so we could fit us all on the table. So we actually moved from the bedroom of my apartment building room to the main area. And Dennis, thank you for setting that all up and taking care of it. We appreciate you and couldn't do it without you. And Owen Dashner, we couldn't do it without him also. But I have everything coming up. If you're a fan of REIA Radio, tomorrow we have Bigger Pockets shorts. We went to Bigger Pockets last month, interviewed about 15 people there in the hallways. Got some great stories, got some great people coming in for future events. And I'm getting feedback here. There we go. So we have BP shorts tomorrow. Next week we have Matt Faircloth, Lauren Warnett after that, Jerry Schlickburn, and we just recorded on Friday with John Hoych. What a story that is. So got some great content coming up, got some big names coming up for you guys too. So we're excited to get those out, and some more information to come with that. Upcoming events, Omaha REIA Luncheon is on the third Friday of the month, every month. Great part about this, you don't need to be a member of the organization to come. If you got a friend that looking at it's like, hey, I might want to be interested in this, bring them to the luncheon. It's a great opportunity. Room fits about 50 people. We have maxed it out once or twice, but generally we get about 25 people showing up. It's your everyday networking event, except we don't take attendance. We don't care what industry you're in. You're all welcome. Everybody in the room gets to speak. There's no presenter, so I'm not the whole entire time. Everybody talks about what's going on in business. So what's happening in your personal life, what's happening in your business, what are you looking for in your business? That's what we do. So everybody gets 2 or 3 minutes to speak. If you've never checked it out, it's at the Rail Car, 144th and Blondo. Totally recommend it. So it'll be Friday, November 17th, 11:30 to 1, if you want to check that out. Also, if you're a National REIA member, meaning you're a member of Omaha REIA, that means you're part of the National REIA. They have an event every month. It's also on that same Friday, every third Friday. It's at 4 p.m. And you got to register for that event on the omaharea.com website. Go to the calendar, click on the link, and you can register. It's free. And that is the event that we hold they hold every month. They bring in speakers, they go over the benefits, and so it's just like this, but it's on a Zoom call. And then they put that stuff on YouTube if you want to watch it out after that. Also, proud to announce some upcoming events that we have coming up here. So Tuesday, December 5th, the flyer is on your table if you want to check it out, and there's more flyers in the corner over there. But we have Sarah Weaver. If you guys don't know who Sarah Weaver is, she wrote the book 30 Days Stay for Bigger Pockets, and she travels the world full-time, doesn't have a house. She has an all-female coaching program that she hosts. She's been on Bigger Pockets podcast, Bigger Pockets Rookie podcast. She's also been on, she's been on a lot of podcasts, but she's hit all the BP ones. And she wrote this book with Ziona McIntyre. Sarah is an amazing person. She's been on, I think she was episode 50 on our podcast or right around there. But she's going to be here. She's bringing a whole bunch of books to give away. We gave away a signed copy last year. We'll give away some more of those. But that will be Tuesday, December 5th. Beyond short-term stays, mastering midterm rentals with Sarah Weaver. Cool thing about Sarah, she actually has investment properties in Omaha. So she is, and she is probably nervous in there. She goes around and actually furnishes properties all around the country for midterms. She's amazing. This will be a great event. Uh, just so you guys know, like she's one of the speakers at Bigger Pockets main conference. So people are paying her quite a bit of money to speak. So I did not. So we appreciate that. I'm cheap, man. I'm cheap. Uh, this is kind of a mainstay. This happens every time, but January 9th, and just so you know, please mark that in your calendars. It will not be the first Tuesday because I don't think anybody's gonna be live on January 2nd to come to a REIA event. So we are doing it Tuesday, January 9th. It'll be the second Tuesday in January. We had Jordan Downey. Jordan is one of the partners at Frankel. They're a tax and bookkeeping company. They're going to go over all of 2023 and 24 planning. So we're calling it essential tax knowledge for real estate planning for 2024 and on. He goes through all the code changes. I know it sounds boring, but if you have a business, you need to know this stuff. It's really important. So I know 5 Hour Energy, drink some coffee. I don't know, but this is the event that you don't want to miss because this is important to your business, and so we appreciate that. But tonight, you're not here to hear me. We're here from Travis Banks. And Travis, I got a little something written up for you, buddy. So I just want to thank everybody for joining us this evening at the Omaha Real Estate Investors Association. We're here tonight for achievements and excitement for what he's about to share to you guys. Please give a warm welcome to Travis Banks. And let's learn together and perhaps take away some strategies and enhance our own investment journey. So welcome, Travis.
Hello, hello. Hey, what's going on, everybody? Thank you, Ted. Before I get started, I just want to give a couple of thank yous to the people who have really impacted me. So first and foremost, I want to thank Ted and the Omaha REIA for actually having me out here. I know creative finance is still relatively new in the investing sphere, so I want to thank him for giving me the opportunity to explain it to you guys. Yeah, of course. I want to thank my best friend Curtis. He was the first person to come with me to the first REIA event July of last year, and ever since then, it's just been moving forward. Want to thank my business partner, mortgage, which you're not looping the bank into the situation. So if you want to jump to the next slide, let's talk about what subject to or sub to is as an investment strategy. Is and is not. Is a way to invest in any market condition. With sub to in your tool belt, you really are not binded by the current market condition that we have right now with super high interest rates. You can get properties and obtain properties with very, very low interest rates. I think the average interest rate that me and my partner have is about 3.2% on our properties, with the current interest rate environment of about 7-8%. So pretty good. It's a great way to get low interest rate loans. You can close as quickly as a cash deal. The quickest deal that we closed in was actually with another sub 2 student in the community. His name is Jared. We closed in about 6 days. So title companies can really run this fast. The title company we use is Midwest Title. David Welty and Rachel over there are great, and you can solve unsolvable problems. What sub 2 is not a one-size-fits-all solution. Sub 2 isn't going to work for every seller, and people who try and do sub 2 for every single seller usually don't get deals because it's not a solution for all sellers. It's also not an investment strategy without risks. I'm going to talk about those today, but there are risks related to sub 2 that aren't with every type of deal that you have. And it's not a clean transaction. What I mean by that is when you buy a property cash, you buy it, seller's out of the deal, you own it. There's no more reason to contact the seller anymore. With a sub 2 deal, that's not the situation. You have a long-term relationship with the seller. You have to maintain that relationship. It's really important that you build on trust and communication. So if you want to jump to the next. So the typical way that a sub 2 transaction works is the seller and the buyer agree on a purchase price for the property. Buyer agrees to take over the mortgage subject to and begins making payments on the mortgage. The buyer typically provides a separate agreement, which is like a subject to agreement or addendum that outlines the terms of what happens if I don't pay. What does a subject to transaction mean? What happens with the mortgage interest that I'm paying over the time? All those kinds of things are included in that agreement. The property's ownership is transferred to the buyer through a deed, and the buyer continues to make the mortgage payments on the existing loan, also pays taxes and insurance for the property. So if you want to jump to the next slide. So the important note here that I want everyone to take from is that the seller's original mortgage and loan terms, including interest rates and repayment terms, remain unchanged, and the seller retains legal liability for the mortgage. It's very, very important, and a lot of people confuse that when they're trying to explain sub 2 or trying to understand sub 2. The seller is still legally responsible for that mortgage. And it's very important that if you're going to do this, you make sure that the seller is aware of that fact. And the lender could potentially foreclose on the property. That's the due and sell clause. I'm going to jump on that and later in this presentation. So if you want to jump to the next. So here are the keys to a successful sub 2 transaction. 1, communication. Like I said before, it's a long-term relationship with the seller. It's not a clean transaction. So what's important with any long-term relationship? Communication. You need to be able to communicate, and you need to have trust that you can communicate to the seller, and the seller can communicate to you. It's very, very important that that happens for this deal to work properly. You need to have trust. Not only do you need to communicate, but the seller needs to trust that you're going to actually make the payments. Because they retain legal liability for that mortgage, it's very important that they trust that you're going to make payments and that you build that trust with the seller. A lot of trust is built through communication and disclosure. If you can disclose to the seller what's happening, make them understand what's going on, they feel more comfortable with you taking it over because you know your stuff. If you don't know it, get with somebody who does know it. So that way they can explain it to you, you can explain it to the seller, right? It's very important for that. And then protection. Because the seller retains legal liability for the property, you need to make sure that they're protected. Stuff happens, life happens. If you cannot make the mortgage payment anymore, you're not in the business of ruining someone else's credit, or you shouldn't be. And if you are, this presentation isn't really for you. But you need to protect the seller under all costs, and you need to protect yourself. Everyone needs to be protected in this. So these 3 things are very, very important to a sub 2 transaction. So if you want to jump to the next slide, let's talk about the benefits a little bit. So first benefit, obviously low interest rates. You can get a 2.9, 3%, 4% mortgage in the current environment, where if you go get a commercial loan, you would get probably around 8.5, 9% interest rates. That's great, right? You save a lot of money on the monthly payment, and you save a lot of money over the lifetime of a loan, which is really, really important. We're in the business of making money. You're a problem solver. So Pace once said something to me that's really stuck with me through my entire investment journey. Investors are not in the business of making money. Investors are in the business of solving problems. Right? So the people who make the most money as real estate investors are the people who can solve the most problems. This is just a tool in your tool belt to be able to solve problems that conventional ways of doing real estate could not solve. Right? Flexibility, along with that problem-solving thing. You have the flexibility to do deals that normal real estate investors would not be able to do, which allows you to be more flexible when it comes to financing terms or terms that you make with the seller to acquire a property. You have a lot more flexibility in that regard, which makes you a lot more savvy of an investor. Market resilience. You're not bound and constrained by the current real estate market. You're really not. The interest rates have been rising ever since I joined SUP2 and started doing real estate deals, and I've not been affected in any regard by the market. I really don't care about the market as a real estate investor. As a stockbroker, it's kind of rough, but as a real estate investor, it's not really that bad. And use the strategist effect. So let's talk about the risks. So if you can jump to the next slide. I created this slide to look the way that it is for a very specific reason. So there's the due on sale risk. That's the acceleration clause for most people who don't know it as due on sale. The bank has the right to call the loan due with the transfer of property if the loan is not paid off in full. There's also litigation. If you don't disclose what this transaction is, what the seller is still liable for, the seller could sue you and say, I did not know what this transaction was. I didn't know what was happening. And if you can't prove that you disclosed it, the insurance policy. You need to be the primary owner of that insurance policy. But I also list the seller as a secondary insured, so when they go and send that to the bank to escrow the insurance premium, the bank still sees that the seller has some legal liability to the property or whatever the case may be. And if something happens to me, the seller still has an insurance policy that they're named on until they get their own, right? But I set it up like this because the biggest risk to any subject to transaction is the seller. Due on sale, litigation, insurance. All of these things derive from the seller. I have a buddy of mine, like I said before, his name is Jared Sven. You might have heard him on the REIA Radio podcast a couple months back. But he did a subject to transaction and he had due on sale called on him because the seller canceled her insurance policy before he was able to put a new one in place. So the sale because they said, hey, it's our right to call the loan due because you transferred the property. But why did that happen? Because he did not clearly explain to the seller, hey, wait to cancel your insurance policy until I put my own in place. Due on sale, likely caused by the seller calling the bank after the fact, spiteful, they don't trust you, they want to resolve the issue. They end up calling the bank says, hey, we're going to accelerate the note. Okay? And then litigation, that usually comes from the seller or the seller's agent. So everything derives from the seller here. So it's really important that you make sure that the seller is on board with the transaction at all times. Can you jump to the next slide? So let's talk about due on sale. So I put the actual definition of this due on sale clause here. You guys can read it. I'm not really going to go through it that much because I really want to talk to why a lender might call due on sale. So a lender would call due on sale because when they initially give the loan to the borrower, they give it to the borrower because the borrower has collateral for that loan. So why does the bank have a due on sale clause enacted in the first place? Because legally, the borrower can transfer the property to another party without paying off the mortgage. They legally can do that. So what does the bank need to do? The bank needs to have a way to protect itself and protect that collateral. So they put the due on sale acceleration clause in place. So that way, if that happens, the bank can still recoup their money. They can recoup their money. They can call in the collateral and recoup the loan that they gave out. Okay? But on top of that, banks aren't really in the business of owning property. Banks are in the business of lending money. So when due on sale is called, it's oftentimes not called where they say, you need to give us this money right now. They oftentimes give a cure notice, or a period of time that you have to transfer back the property to the seller. So if you want to here's an example of a due on sale notice that was received. So if you have the time, read through that. But I want you to really focus on the second paragraph. Therefore, you are required to rescind the above mentioned transfer of title and restore title back to the original borrowers as listed on the security instrument. What is the bank saying here? Hey, you have a time frame to give this property back to the seller because we lent to them because they had collateral. We need that collateral in place in order for the loan to still be current. So what do you do when due on sale is called? I told Jared this, I'm going to tell you guys all this. If you do this transaction and you due on sale is called, what you need to do is transfer the property back to the seller. And what I recommend is doing an executory contract, land contract. I'm sure a lot of you are familiar with that. But a land contract, the seller retains legal title of the property, but you still have equitable title of the property. You can rent it out, you can sell it, you can fix it up, you can do whatever you want. You just don't get the tax benefits of owning a property, right? If you invest in properties for the tax benefits, you need to be aware that due on sale can be called. If you don't invest for the property for tax benefits and you're looking at cash flow, simple fix to a over-exaggerated issue that is with sub 2. Now, a lot of people, I actually got on a call with a real estate broker in Lincoln about 3 weeks ago. And her main objection to sub 2 was that it is mortgage fraud. And so I wanted to put in a slide here to explain what mortgage fraud is and how subject to is different than that. So if you want to jump to the next slide. What is mortgage fraud? Mortgage fraud refers to the deliberate act of lying or omitting information that is used by a mortgage underwriter to lend, fund, purchase, or insure a mortgage loan. So what did I highlight there or bold? Deliberate. When you're doing a subject to transaction, I've heard some people who do this type of transaction say, oh, just put in a land trust, right? The bank doesn't know who the owner of that land trust is, so it solves the problem. What does that do? That's the deliberate act of trying to omit the fact that this deal was done. How do I do a subject to transaction? How does Pace Morby do a subject to transaction? We run it through a title company. We make sure that everything is clear and it's public record. Why? Because we're not hiding the fact that we did this transaction, this legal transaction from the bank. We're not hiding that fact. But it's also not our responsibility to monitor the bank's loan. It's not our responsibility to monitor the provisions of the bank's loan if the title is transferred. So if they call due on sale, that's a risk that I'm taking, and I know how to overcome that risk. However, I'm not hiding the fact from the bank at all. Now, I'm sure a lot of you are going to have questions about this at the end, so I'm going to go ahead and move through the presentation so we can get to the Q&A, which I know a lot of you might have questions about. So here's some considerations that I want you to have before you do a sub 2 transaction. One, the most important thing is, does this transaction solve the seller's problem? Pretty simple question. But sometimes people don't ask the question. Does it solve the seller's problem? Because if it doesn't, the seller's not going to agree to it. It's not solving my problem, and I don't want to take that risk. Great. So secondly, what paperwork and protections are required? I just gave a quick bullet list. If you have questions about what kind of protections or insurance that you should have with a sub-2 transaction, please reach out to me or my business partner after the presentation. We're happy to have the conversation with you. But one, you need to disclose what type of transaction it is. Hey, you're selling me the property, I'm keeping your loan in place. You're not loaning me your loan, I'm paying the loan on your behalf. You don't own the property anymore. You don't get to claim mortgage insurance for the property anymore. You don't get the 1098, it comes to me. And also, very important, I'm not forcing you to do this. That's very important if you're going to have a disclosure statement to the seller. Make sure that they're signing off on the fact that you're not forcing them to do this, because you shouldn't be. You shouldn't be forcing them to do this. They should come to the conclusion that, hey, this is the best solution for me. Servicing company. It just makes life easier if you have a servicing company actually paying the mortgage on your behalf. You pay the servicing company, the seller is looped in on the fact that the payment was made, and the servicing company keeps track of the fact that you're paying it. This is important if the seller wants to buy a new house in like 2 years, right? You have a record that you've been making the payments on the seller's behalf, and the seller can provide that to their loan officer or their underwriter to show, hey, I'm not making these payments, I haven't been making it for X amount of months. Limited durable power of attorney. Now, this is important because of when it comes to mortgage fraud. You should never be calling the bank impersonating the seller. I've seen some people do that, and it kind of throws me a little bit because you're committing fraud. You're intentionally acting like someone that you are not. So what you need to have is the authority to call the bank on the seller's behalf. So you need a limited durable power of attorney. Limited adjective here. It's limited to the property. I'm not trying to get the seller's bank account information. I'm not trying to take control of the seller's life. I'm trying to make sure that I have the right to call the bank on the seller's behalf. I can call their current insurance company on the seller's behalf. And I can do anything that's addressed to the seller. I can act as power of attorney for them. That's very important when it comes to me because I don't want to impersonate anyone. My name is Travis Banks, and that's how it's always going to be. Additional protections, right? I put wrap around mortgage here because it's very important for you to know if the seller is looking to buy a house and when, right? Because a wrap mortgage is the security instrument that also protects the seller in addition. What is a wrap mortgage? So imagine there's a mortgage on the property, and what you're doing is you're creating an all-inclusive deed in trust that includes the principal balance of the current mortgage in that deed of trust, right? So you can add 5,000, 10,000, or you can mirror it, the exact principal interest amount. What does that do? If I am doing trustor and the bank is the beneficiary. What does that provide? Security for the seller. It provides security for the seller that you have a legal obligation to the seller to pay the same amount, if not more, to the bank. That's what that provides. And it makes sellers feel a lot more comfortable that they have some security instrument that is recorded against the property, right? If a seller needs it, do it, right? It doesn't hurt you at all, especially if you're doing a mirroring the terms of their existing mortgage. You're just giving them the protection that they need to feel comfortable with it. And the due on sale addendum. Basically, what you want to do is include in the contract that if due on sale is called, I have the right to transfer the deed back to you as a seller, because sometimes it's hard to get in contact with a seller that you haven't talked to in 12 months, 24 months, 36 months. Heck, they can be dead. You don't know. But you need to have the right to transfer the property to someone else. So that way, the due on sale, you can actually address the issue if it becomes an issue. Personally speaking, I've not had any due on sale clause called on me, but I have had some people who I know have, and that all the issues have been resolved when they transfer the deed back to the seller. So what happens if your exit strategy doesn't work?
Like I said at the beginning, life happens, right? And if you can't meet the obligations of the mortgage anymore, you're dealing with someone else's credit. You're dealing with somebody else's, life. You're dealing with somebody else's livelihood. You need to make sure that you have provisions in place that if you do default on the mortgage, how does the seller get the property back, right? Make it easy for them up front. So if it happens, it's not hard for them on the back end. If the is the insurance policy enforceable, and does title know how to do this type of transaction? I'll just tell you guys, since you guys are all in Omaha, if you're going to do a sub-2 transaction, work with Midwest Title. They have been the easiest title company I've ever worked with when it comes to these types of transactions. They're quick, they're efficient, and they provide a lot of clarity on this transaction, and they know what they're doing. Exactly. If you tell me you're a REIA member, they're also a sponsor at the REIA. Reach out to David Welty, and he'll get you set up. And then the insurance policy enforceable. Again, if you get an insurance policy and you're not listed as the primary owner in that insurance policy and you own the property, the insurance policy could say, hey, you don't own the property and you own the property and you're not the policy holder. So we're not going to pay out the insurance. It's a terrible situation to be in. So make sure that your insurance policy is enforceable. And then lastly, everybody's not going to be comfortable with this type of deal, right? Some of you might not be comfortable with this type of deal after I've explained it to you. That's okay. You should not be trying to force anyone to do this, right? Because when you start forcing people to do something, people end up with regrets. And if people end up with regrets, people end up spiteful. And if people end up spiteful, you end up in court. So make sure you don't force anyone to do it if they're not comfortable with doing it. So I added these 2 slides in because I understand there's some agents in the audience. And this type of transaction, you guys may not fully understand yet. So how would you ever explain this type of transaction to someone that you're representing? So I put a bullet list or a numbered list on how you should present the subject to offer if you get one on one of your listings to your seller. First, you need to understand the seller's needs. Does this even solve their problem? If it doesn't solve their problem, let the buyer know that. Hey, that's not going to work for the seller. Seller needs this, seller needs that. Doesn't matter. If it doesn't work for the seller and you know this because the seller has expressed to you what they're looking to do, that's the first step. Secondly, if it does fit the seller's needs, you need to prepare the offer. Make sure you qualify the buyer. Make sure you know where the buyer's coming from. It's not just some random person who's trying to do this because they heard a Pace Morby YouTube video and they're like, I'm a sub-2 investor. No. Qualify the buyer and make sure that they have a prepared offer for you. That may involve having some conversations with the seller about, hey, if we were to seller finance this or whatever the case may be, what do you need? What do you need, right? Explaining the subject to concept. Now, I know this may be the first time that you guys are actually getting more of an in-depth understanding of this concept, and that's okay, because you can reach out to me and I can explain it to you a little bit more personalized, so maybe you can understand it. My superpower is teaching, and I love to have conversations with people and teach them how to have this conversation, but you need to be able to explain to the seller what it is. What is the buyer doing? They're going to take over your mortgage payments for you, but you're still going to be liable for the mortgage. Well, what does that mean? Well, then you go talk about the benefits of, well, if they do this, this, and this, there's the potential to sell the property more quickly. Concerns. What happens if this? What happens if that? Go back to point 3, make sure that the buyer, if they're offering this to you, make sure you understand what they're offering to you and you ask them questions. If they can't answer those questions, they shouldn't be buying the property, right? But address the concerns that the seller has. If you can jump to the next slide, right? Then encourage the seller to go get legal advice. Talk to a lawyer, right? I've had some deals fall through the cracks because the seller's lawyer wasn't comfortable with it. At the end of the day, if the seller's lawyer is not comfortable with it and they trust that lawyer, awesome. I can urge them that, hey, can I talk to your lawyer about this? They say no, fine. At the end of the day, I'm not trying to force anyone into this type of deal. And then financial advice. Does it make financial sense for them to do that? Encourage them to seek some financial advice. Then offer some comparisons, right? If you have a property that's listed on the market and you've gotten offers for it from cash investors or anything like that, explain the differences between the cash offer and the subject to offer. What are the benefits of each? What are the, disadvantages of each? Make sure that the seller understands all of the options on the table. Be transparent. If you don't feel comfortable with the buyer, tell your seller that. If you know the buyer and you know the buyer is a qualified person, tell the seller, right? Be transparent about how you're feeling about the situation too, because the seller hired you to represent them. So do that. And then if the seller agrees to it, help them negotiate. You're working for them. Make sure that they're getting the best offer on the table, right? And then if you go back to the buyer has a different thing, help them understand where the buyer's coming from. You're looking to get paid and protect your seller at the same time, right? Then last but not least, make sure you set up protections, right? And if you have questions about the protections, please reach out to me, because your job is a fiduciary to your seller. You need to make sure that your seller is protected no matter what. You have no responsibility to the buyer. You have every responsibility to the seller. So make sure that they're protected. So if you can jump to the next slide, I'm going to talk about my personal examples here. So this is a property that we bought, I think back in April of this year. This is a fourplex that was sitting on market for 100+ days. I don't know if any of you saw it, but the property address is 4410 North 52nd Street. So this property wasn't moving because we were in a trending down market and the sellers were asking too much. So they weren't getting any offers for the property because no one could afford it. It was an underperforming property. The rents were too low and needed a lot of work. Didn't make sense for anyone. So this property was actually brought to me by Sanat, who's in this audience right now. He brought it to me and said, hey, the agent said that the seller might be open to subject to. They need some explanation of what the situation is. So I called the agent. We ended up finding out that the seller was in pre-foreclosure and the seller didn't live here anymore. So they had a unperforming property that they were $20,000 behind on their mortgage payments for, and they couldn't afford it anymore. So I ended up talking with the seller, ended up explaining subject to the seller, address the seller's concerns. Hey, what happens if you guys don't pay? What happens if this? What happens if that? And I ended up coming to terms with the seller, said, hey, we'll go ahead and reinstate your loan, pay you $20,000, and then you have $15,000 of equity in the property. We're going to go ahead and put you in second position on this property with your $15,000 of equity, so that way that's still coming to you. But the agreement is I'm going to have 3 years of no payment for you because I have to update this property. It's been underserved, it's not been working, and we need to put some money into the property. We ended up putting, I think, about like $25,000 into the property. So in all, we were about $45,000, $50,000 invested into the property. But we have 3 years of no payments to the seller, and we're currently renting this out right now. All units are rented. We're estimated to cash flow anywhere from $750 to $1,000 per month after expenses to 24 months. So for that, we're sitting, I think, about 24% cash on cash return for the $50,000 that we invested. So not a bad spread on that. If you want to jump to the next property, so that was a long-term rental exit. I also invest out of state. So this is a property that we bought in Texas, 407 Reservation Drive. With this property, this actually came to us from another sub-2 student who had gotten this under contract. Now, me and Holly made a lot of mistakes with this property. We had some growing pains with this one. But the seller was out of state. The seller didn't live in the property anymore, and they wanted to get it off the hook. It was sitting on market for, again, 100+ days. The mortgage on the property, though, was 2.9%. So it was a really, really attractive mortgage to us. So what we did is we ended up coming to terms with the seller, and we're now making the seller a monthly payment on the mortgage But for this seller particularly, they had interest only on their mortgage, on their second note. Now, if I had negotiated, that wouldn't have been the situation, but we bought it from a wholesaler. So, that happens. What we ended up doing is it just didn't make sense for us to hold on to it as a long-term rental. So what we did was we ended up selling this on owner financing to someone else. Long-term, there was a husband and wife. His name is Tony and her name is Carrie. They had been looking to live in a house for a long time, but Tony was a self-employed individual. He didn't have the income for the bank to support him getting a property and buying it the conventional method. But he had a lot of money sitting in a savings account to put as a down payment. So we went back and forth with Tony, but he ended up giving us a down payment and moving into the house. Now, again, this has been a headache for us a little bit, but we finally got on good working terms with Tony and Carrie, and we're cash flowing $600 a month passively. We have no maintenance, repairs, anything like that because they own the property. So they're responsible for insurance, they're responsible for taxes, they're responsible for paying our mortgage note, and then we pay the seller's mortgage note with the servicing company, and we make $600 a month from it. And last but not least, we have our most recent acquisition, which is 6222 Hilltop Avenue in Panama City Beach, Florida. So this property was also on market. So I put 3 on market properties to show you that deals with agents can happen. If you've watched any YouTube video with Pace, he'll tell you agents are the devil. They're not. Agents who aren't open to hearing your offer. Yeah. But agents who aren't open to hearing you out, they're not the devil, but they could stand to be more open to offers that are coming their way because their job is to provide a service to the seller. And if they're not listening to all offers, they're doing a disservice to the seller. But this was an on-market deal. The seller owned this property, and they also lived out of state. They were in Oklahoma at the time. But they wanted to get out of the Airbnb business, and they wanted way too much for the property. So for us, we saw that the mortgage payment or the mortgage interest rate was 3.1%, and the seller had agreed to doing a seven-year note for us at 5%, I think it was. So for us, we looked at the potential gross of the Airbnb for Airbnb on this property, and we said, hey, with the mortgage payment that we have in place, we can definitely do this like all day, every day. So we went ahead and bought the property. Holly's flown down to Florida like two times to get this property updated and fixed in the backyard. And now we have our listings going out. So what we're doing is we're projected to gross $106,000 per year from this property in about 6 to 12 months once we get it updated. So that's really great for us, right? And all of these deals I got into with no money out of my pocket because I brought in private money lenders after explaining what Subject 2 is, and they felt comfortable lending on the deal with me. So I've put no money into any of these deals, and I'm currently, $1.8 million worth of real estate. So can't be mad about that. So if you want to jump to the next slide. So let's just go over a recap of what Sub 2 is because you've heard me talk, and I want to hear some questions from you guys. Sub 2 is a great tool to have in your investment tool belt, but it isn't a one-size-fits-all solution. There are many, many benefits to this type of transaction, but you have to understand that there's also risks. With great reward comes, risks. Since this isn't a clean transaction, you have to build trust and have clear communication with the seller. That's paramount. If you take anything from this presentation, take the fact that you have to communicate with the seller because you're in a long-term relationship with them. And while this transaction type is legal, that doesn't mean you shouldn't have the proper disclosures and protections in place for all parties, like you would do with anything, right? So if you want to jump. So I just want to thank you guys for hearing me out, listening to me talk about this thing that's really changed my life. But if you do have questions or you need help with a creative deal, or you just need a consultant, or you just need to talk to somebody's offered you something, hey, you want to put in an offer, reach out to me. There's my Instagram and my email, and then also reach out to my business partner, Holly. Put her Instagram and her email up here too. We're always happy to help. We're always happy to look forward to, helping people get into this type of transaction because it's important for us to make sure that you guys are doing it the right way because we don't want anyone getting in trouble for not understanding and having the knowledge of how to do it. So better to ask than to, get in trouble. If you want to jump to the next slide. Thank you guys. So appreciate it.
guys have questions, we have a microphone right here in the middle. And so if you guys come to the microphone, that way everybody can hear it. And then we got about 50 people watching online right now too, so that way they can hear the questions.
And you also don't have to keep it specific to sub two. If you just have questions about creative in general, happy to answer any question.
And I can throw a whole bunch of questions if nobody else asks.
Dude, Travis, awesome presentation. It makes me, after seeing your slides, I'm like, I did a terrible job because you're great at PowerPoint. But anyways, so question for you. So what would you say, this is a tool in the tool belt, right?
Mhm.
What would you say is when you go on a seller lead or when you see some kind of a deal, what alarms are ringing off saying sub two is going to be the best option for this scenario? And you saw the days on market being 100 plus. I saw that 3 times. Is there any other time that you're seeing, okay, sub two is going to be the best option here?
So pre-foreclosures are great for sub two because they can't already afford the mortgage payment and they're behind, right? So there's a time constraint there. Another good telltale sign is out of state, right? If they don't live in the property anymore, you don't know what they could be doing. They could be dealing with some terrible tenants and they just don't want to deal with the property anymore. Also, if a property is overpriced in today's market, that also pings me to some stuff because why is it overpriced when the agent probably knows what it could sell for? Likely they have a mortgage in place that they have to break even, right? So those things kind of ping me when I'm looking at properties. Hey, this is probably going to be a good sub two transaction. But at the end of the day, even if I go in with the assumption that maybe sub two might be a great transaction, talk to the seller, right? Find out what their situation is, make them feel comfortable, and they'll tell you. Like they'll tell you, hey, what am I looking to do? Because if a seller also tells me, like they could have none of those things, and they could say, I just wish somebody would take over the mortgage. I'm okay with like my equity. Great, I can do that. And there's a sub two deal right there.
Sounds good. And then the other thing, so when you're getting into deals with no money out of your pocket, you're working with a private money lender
Mhm.
and then solving the seller's problem.
Mhm.
How are you structuring? Can you go over a deal that you structured with a private money lender for how that working relationship worked for the
Yeah.
deal?
So actually, I just got an email today from a private money lender. But they want to be real estate investors. So he reaches out to them, and what we do is we take over the property from the seller, and then there's a first position mortgage on that property. And then the private money lender, we have a conversation about what types of terms they're looking for, what return. And in this situation, she said, hey, I'm okay with 12% interest only for 18 months. And then you guys can also extend another 18 months if at 18 months you guys can't refi me out. But I want 2 points up front and I want 3 points on an extension. And so we put her in second position with those terms.
Awesome. So all debt, no equity.
Correct.
Awesome. Love it, brother.
But the goal with it is if the exit strategy works, that's the goal. Like we look at what's the potential appreciation for this particular property. It's in a really nice neighborhood that has a lot of potential for appreciation. And Omaha also is very resilient to huge market dips. So that's not really a concern of mine. And then just having the background as a stockbroker, I kind of see where the market's going just a little bit because the housing market trails behind the stock market. So have a little bit of an advantage there. So I'm just looking at, what's the next step? How can we help these people? But, I always work in with my PMLs extensions, because I'm like, if I can't, what happens? Right? Have the conversation up front.
Awesome. Sounds good. Thank you.
Yep. Ollie.
So this isn't a question, but I wanted to add to something that we look for properties on market specifically. If a property was just bought and then the seller needs to sell and they have zero equity, that's like a really big list that a lot of our colleagues pull from, because if they sell, they're literally cutting a check to sell. Now in Omaha, our appreciation, like the market is very healthy compared to a lot of bigger markets in the area or in the US. And so we don't see that quite as often here in Omaha, but in like Houston, Dallas, other places where professionals might come in and buy a home and then have to relocate, but they have no interest in being a landlord. that's an opportunity because they will literally only make any money if they sell in this way. If they try to sell on the market in order to pay all closing costs and agent commissions, they're going to have to write a check. So this is another tool to let people out of their housing commitment and still make some cash in their pocket. So.
Yeah, and to that point, like let's think about it from the seller's needs, right? The seller has to write $15,000 check to sell their house, and you can come in and offer them $10,000. What's the better solution, right? At the end of the day, what is the seller looking at? I can save 15,000 and make 10,000, or I can write 15,000. But it also depends on what they're looking to do, right? Hi.
Hi. So I think the biggest hurdle with this is being able to explain what sub 2 is to the seller and
Yeah.
make them understand.
Mhm.
And obviously, like you said, the trust piece. But I think another hurdle you have, and one thing I've always kind of wondered about, is the seller's still on the hook.
Yeah.
For obviously, you're going to pay the mortgage. But like, for instance, if they want to go and buy another property in the future,
Yeah.
how do you, their debt to income ratio is still including that property.
Yes.
So how do you address those kind of questions?
I'm so glad you asked that question. So there's a couple of ways that you can address this issue. So firstly, I ask the seller straight up, hey, when are you looking to buy another house? They tell me anything less than 12 months, I'm going to write them a lease. I'm going to pay a lease to them so they can provide that to their underwriter and they can go get a property. And I'm going to pay that lease again for them to go buy another house
Or a car?
or a car or whatever the
Yeah.
case may be, right? They need to have some way to offset that. Now, after 12 months, right, you can either write a wraparound mortgage that's a security instrument. And that security instrument, once it has 12 months of seasoning, any bank will use that to offset their debt to income, especially if a wraparound mortgage has over 3 years after that point showing that, you know, they have money coming into them. So say there's 25 years left on a mortgage note and you do a wraparound mortgage for 25 years. After 12 months, they take that to the bank. Hey, I have a note that's still existing for 24 more years. I've had payments made to me on time. The servicing company proves it. Remove this from my debt to
Right.
income. There's
So-
no problem with an underwriting doing that because they can see, hey, this person has made on time payments. There's 24 years left. There's no reason to believe that there wouldn't be. But then also, you know, sometimes just talking to the underwriter about what the situation is helps, right? I didn't show the deal up here, but I had a deal in Abilene, Texas. It was a VA loan, and the seller wanted to sell the house to buy another house. And so what we did is we bought it sub 2, and then I gave a call to their loan officer and I explained what we did. And the loan officer said, so basically this is just a over-aggrandized lease. I said, if you want to see it that way, sure. And so then he removed it from their debt to income because he said, you're responsible for making the payments. And I had 2 months of seasoning at that point. We had made 2 mortgage payments already. And he said, there's no reason to believe that you wouldn't because the paperwork looks solid. I see that you have other properties securing you. You have a positive cash flowing situation. There's no reason to believe that you won't continue making these payments. And he qualified them for another house with a VA loan.
Yep.
Right? So really what it boils down to is making sure that your paperwork is set up properly and the seller is protected for what they need, right? Some sellers are just like, I don't want to buy another house. I just want to travel the world. Great. For them, that may not be the problem, but if they want to go buy a house or they want to go buy a car or
Or a
whatever the case
car.
may be, yeah, that situation, make sure that there is the proper instrument for their time frame.
I see. Thank you. And another reason to use a servicing company, right?
100%.
Yeah.
Don't ever do this kind of deal without a servicing company because you want to have somebody else keeping track of the payments so you don't have to.
I just go like this, buddy. It's all good. Can you share a particularly challenging deal and how you navigated it using creative financing?
So the challenging deal that I actually had was that VA one, because that was the first time that I actually had a situation where the seller wanted to buy a new property. So here, let's talk about the situation. So me, I'd been in sub 2 for about 6 months at the point, and there was kind of freaking out just a little bit because I was like, what am I supposed to do in this situation? Again, I had been in 6 months. This was like my second deal that I was taking on. So I was not familiar with this strategy. So how I fixed it is I gave what we ended up doing. We were initially going to buy it as a straight sub 2. But what we ended up doing is we ended up creating a wraparound mortgage that we mirrored the seller's existing terms. So then I gave that to the loan officer and I said, hey, here's a note for the seller that I'm obligated to pay the seller the same amount that the seller's to pay the mortgage company. And I showed him 2 months of seasoning. I said, hey, here's the 2 payments that have come from our bank account because we didn't have a servicing company set up at the time because we didn't own the property at the time. So I said, here are the 2 mortgage payments that come out of our bank account showing that we're paying this. And here's how long the mortgage note is. We're supposed to be paying this for the next 28 years, I believe it was. And then we had the conversation. We talked about, hey, so what does this obligation mean? Like, how long is it going to be? Like, what security is the seller going to have? When can the seller get the amount that's due to them for their equity? And then he ended up removing it from their debt to income because he said, okay, so this paperwork looks great. There's no reason to believe that you're not going to make the payment to the seller anymore. And the seller is qualified for their VA entitlements to go get a different property. So we ended up solving that seller's problem with creative financing by just switching from a sub 2 to a wraparound mortgage. Make sense? Did that answer your question? Great. Awesome. Guys, don't be afraid to ask questions, you know. I'm up here.
Hey, could you describe a little bit more about how to work with an agent? Like if you are on the MLS or whatever, like how do you negotiate with them? Do you guys pay the fees typically, or what does that look like if you are going with an agent?
Yeah. What I'll do is I'll reach out to the agent and try and have the conversation about like why the property hasn't been selling. I need to understand, like, is my offer even going to make sense? So I often don't call properties that have been listed on the market for 2 days. Doesn't make sense for me to do that. Why would I put the seller at risk when they could potentially get like a traditional financing offer, right? So I do look for some time on the market. But when I do, I have a conversation with the agent. I say, hey, my name's Travis. I'm an Omaha investor. I own a couple properties here. I'm interested in this property. What is going on? It's been listed for X amount of days. What's happening? Agent will either tell me, hey, like we've had a couple of listings, people have been wasting our time, fell out like that. I'll just say, what's the point? If the agent's like that, I don't even want to work with them, right? So I am trying to discern from the initial conversation, what type of agent is this? Because I have no interest in working with people who don't want to work with me. People who are rude, people who are disrespectful, people who won't give me the type of day, I don't even want to work with you. If it's really a situation where the seller needs my help and you don't want to work with me, that's fine, right? You're going to do what you're going to do. The seller hired you. That's okay. But I don't need to work with you. But I'll have the conversation with the agent. I'll ask them, what the situation is. If the agent wants to be forthcoming or not, great. Then I'll go run my numbers for a traditional offer, a traditional cash offer, because I think it's important to know if you can do it traditionally, then do it, right? And the seller might be open to it, right? So then I'll come back with my cash offer for the seller or for the agent. And I'll say, hey, if this cash offer doesn't work, I do have creative strategies to get this deal done if you're open to hearing about them. Agent will either say yes or no. The agent says yes, I then go into the conversation. Are you familiar with sub 2 at all? Yeah, no. Great. So let me explain it to you. Let me explain it, and then I will check for understanding with the agent. Because at the end of the day, at that point, if the agent is open to the conversation, if the agent's going to go back to the seller, the agent needs to know how to explain it to the seller, right? So my job is to then teach the agent to have the conversation with the seller. And I always make the open offer to the agent. Hey, if you don't feel comfortable entirely with it, I am open to a three-way call. If you don't want to do that, that is okay. I've had a couple of agents, actually all the ones in Omaha who I've actually worked with, they were allowing me to actually have a three-way call with them and the seller. I want the agent there to protect their seller. I want that. But I also want to be able to explain it to the seller because maybe the agent doesn't know. So then I have a conversation with the seller, and then I continue working through the agent. I'm never contacting the seller directly without the agent's consent. Does that make sense? Did I answer your question?
What about commissions?
Commissions. Commissions. For every deal we've done in Omaha, I make sure I pay the commissions out of pocket. It's a negotiating tactic. Like if I'm giving a ton of equity, maybe the seller's going to pay the commissions. But for the situations in Omaha that I've had thus far, there's been very little amount of equity, or seller's been okay with taking a seller financing note. So we end up paying the agent commissions out of pocket at closing and the closing costs. So seller actually saved money on the upfront a lot of the times.
Hi, Travis. Jason Woodward. I had reached out to you a week or two ago, and I think within 2 hours, we had about a half-hour phone conversation. So I appreciate that.
Yeah.
Anybody? What's that? Okay. So anybody that has questions, reach out to him. He's great. Can you explain the wraparound mortgage? Do I go to my lender and get that? Or how does that part work? Because
So-
the property we were talking about, she wants to go buy a house here locally soon. And so subject to won't work
Yeah.
for her.
So the wraparound mortgage. Okay, so what it is, some people may be familiar with it as an all-inclusive deed of trust, but what it is you're putting a recorded instrument against the property that you are including in the principal amount, the mortgage, right? So say, for example, we'll use the example that I had with the VA loan, okay? There was a $109,000 principal note on the property. And so what I did is I created a secondary note, right? So the original note has the bank as the beneficiary, the bank's trustee, whoever they elected, and the seller as the trustor. So that's the original note. Want to show everyone. That's the original note, right? So then what I did is I took a new note and I said, I'm the trustor. The seller is the trustee, and the title company's insurance agency is the trustee, and the seller is the beneficiary. And that new note had a principal balance of $114,000, with me making a down payment of $5,000 to make sure that the terms of the all-inclusive deed of trust match the terms of the seller's note. Why did I do that? Because the seller then has a legal document saying this person, Travis, is responsible for paying me, the seller, the same amount that I, the seller, am responsible for paying the bank. Why is that important? Because with that legal document, lenders can remove it from the debt to income because it is a note, promissory note. Honeys, they had a great conversation. A couple weeks later, lady calls Pace back and says, "You are the only person that actually spent the time to find out what I needed, and I want to sell to you. Tell me your." I'm spending all the time on real estate. I don't have a lot of quality time. So it's about finding what time frames that I need to work on real estate, because I know from 7:30 to 4 I can't. Right. So then it works around, for me personally, when is date night? Right. My date night with her is every Friday. Right. When we also have 2 dogs, a cat. Yeah, 2 dogs and a cat. So we have a lot going on. But it's being intentional about my time, being intentional about what I'm spending time on, right? If it's going to be spending time with my girlfriend, intentional, right? I'm not just going to, oh yeah, I'm spending time with Audrey. No, it's intentional. Hey, let's go do something. Let's watch. Yeah, it really boils down to her. Whatever she says kind of goes. But it's being intentional with time, because since there's only so many hours in a day, I need to make sure that whatever I'm doing, it's intentional with it, because since I am working full time and doing real estate, and have a girlfriend and have 2 dogs and have a cat, time is very important to me, and it's very important to be intentional with it. So.
Hey man, thanks for all your time and
Yeah.
knowledge. My question is kind of tied to what Jason was talking about with the wraparounds. I see the concern from the sellers being like, "Hey, I don't want to be tied down for 20 years with you. You're looking young right now, but you're not going to look this way for 20 years."
Yeah.
So, like, you talked about balloon payments. How do you set that up, and like, how do you make sure that your exit strategy works at the 5 year?
Well, so it always boils down to disclosure, right? If it makes sense for me and I see a potential to exit out on a property in the balloon term, I'm going to do it, right? For me, 5 years is kind of my bare minimum for a balloon term. Why? Because most market cycles go in 5 to 10 year increments, and so we're in a dipping market cycle. But when the Fed will eventually lower interest rates, the 10-year yield will come down, which means mortgage rates will come down. And so because of that, we already have a supply issue for me. I see that we have a supply issue. There's not enough houses for the buyer pool, but a lot of buyers are washed out of the market because they have 8% rates and buyers can't qualify. So when the mortgages come down, mortgage rates come down, a ton of buyers who couldn't buy before, who've been sitting on money, are going to go and buy. Asset appreciation. But to answer your question, how do I structure it? I look at the exit. I look at the area. Will it make sense for me to balloon you out in the time frame that you're asking for? Yes or no? If yes, great. I'm okay with the balloon. Prefer not, but I'm okay with it because I understand that's what needs to get done with the deal. If it doesn't, I'll go to the seller and say, hey, if I agree to your balloon terms, here are my concerns. Disclosure. Talk to the seller about it. Hey, I'm going to communicate my concerns with the balloon that you're asking for. I don't think I'll be able to balloon you out in the time frame because I won't be able to refinance or sell the property for the amount that you're owed. And I don't want to put you in a sticky situation. Would you be open if the balloon term comes and I can't take you out of the deal to extending the balloon for an additional amount of time? Would you be open to that? If the seller says no, I respectfully say, hey, I don't think we're a good fit for the deal, and that's okay, because I can't guarantee you that I'll be able to take you out of the deal. If I can, and they agree to that, we do that instead. And then when it comes to the exit strategy, if I am going to do like a wraparound mortgage to a like to an end buyer, right, where it's a owner finance, anything that's under 8 years, I'm not going to owner finance it. Do a lease option, do a land contract, but I'm not going to owner finance it because then you start running into Dodd-Frank issues, right? And you're not qualifying the buyer, and you're putting a buyer in a position that they're going to be set up. But again, I'm not an attorney. Talk to your attorneys about creating notes, like what legalities you have to face. But you need to make sure that when you're selling it to someone on a owner finance, you also let them know and disclose, hey, there is a note on this property that has an 8-year, 12-year, 10-year balloon on it. Are you okay with that? Great. Let me go ahead and qualify you with an RMLO. A residential mortgage loan officer. I'll just hire someone like my guy, Sanat over there. He's a mortgage broker. So he could actually do it for you. He'll look at like their credit, their income, and qualify them for a mortgage. And then if they qualify and they're okay and they sign a disclaimer saying, I understand that there is an underlying note and you are not selling to the property to me free of encumbrances and there is this underlying note, I have done everything I need to disclose to the end buyer, there is a note, there is a balloon, and you are assuming responsibility of that balloon and our understanding of that possibility that the balloon will happen, right? But better safe than sorry. If you stay on a land contract, I've talked about this with a couple attorneys, but I'm not 100% sure, so take this with a grain of salt. If you sell it on a land contract, you still own the property. As long as you don't encumber the property more than what is owed on the land contract, you can do it. So in theory, you could refinance out that balloon with your own mortgage and take care of it that way. But that's a little bit more intricate. If you have questions about that, just talk to me after, okay?
Thank you.
Yeah, of course. Hey, Amber, how you doing?
Travis, how are you? Okay. Yeah. I'm wondering, does the subject to invalidate the seller's title insurance?
Does the subject to invalidate the seller's title insurance?
Yeah.
Yes.
Okay.
Right. And that's another risk that I forgot to put up there. I was actually talking to my buddy over there about this earlier. So with title insurance, because the seller's actually selling the property, the title insurance that they got in the first place was the title going to them, that if there was a problem with the title, they had insurance for it. Since they are selling the property, how would they have title insurance? They don't even have the title, right? So it does invalidate the title insurance. Now, the title company can give you a new insurance policy for a conventional loan if you do this, but for VA and FHA loans, they can't. They'll still run a title report for you, but they won't give you any title insurance for the deal because those are federally backed loans. And there's a subdivision saying that if a title company, like in the federal code, if a title company gives insurance for the property that is a federally backed loan without paying off the loan, they lose their right to escrow for a year. So they won't do it.
Okay with you.
Talk to Holly. But seriously, reach out to me on Instagram or on Facebook. I'm in the Omaha REIA page as well, or email, or seriously, reach out to Holly. A lot of the people who reach out to her, when she texts me, it kind of takes priority underneath Audrey, obviously. But when she texts me, it kind of takes priority. So if you reach out to her and she tells me to call you, I'll more than likely call you back quicker than maybe my Facebook Messenger requests. Great.
Any last remarks you want to leave with everybody?
If you are afraid to ask a question in front of everybody, don't be afraid to ask me a question after. Seriously, because I would love all of you to learn about it.
Awesome. Can you give me a round of applause for Travis Banks, please, guys? Travis, will you and the crew be hanging out for drinks afterwards?
Yeah, we'll be around.
Okay, so yeah, we'll be over at Burger Theory after this. So if you guys want to check that out, Tom, if you guys didn't get the card in there or something with their name written on it, this would be your last second to do it. We got 3 books we're about to give away. Tom, what's the first card you're going to pull there, buddy? He's like Vanna White. Diane Crawford. You can go pick the first book out of that. Diane and her husband are in my Mustang club, so we always get to talk Mustangs. That's always a good thing. They got a beautiful one if you ever want to talk to them about that. Okay, what's the next name, Tom? We need some music while we do this. Danielle? Is there a Danielle to put a card in there? Hey, Danielle. Woo! Good job. And last but not least, Tom, the final winner of the night. 3 books. We already had 3 books in one night. Chuck Crawford. Yeah. Hey, so what we ask, so if you, Chuck, if you open it up and look at the inside, I put a business card in there. If you open it up, open that cover up real quick. Amber put a card because she had it last, so she just brought it back. So you bring it back, put your contact information there, so we know who's keeps on passing it on. So we appreciate that. Appreciate you guys coming out. Couple just notes here. Again, if any of our events, go on our Facebook page, Instagram, or REIA Radio on Instagram. We will be next door at Burger Theory. DVG is taking care of the first round of beers. So definitely take advantage of that. Usually that's when deals are actually happening. And Travis Banks to be sitting over there. So again, if you didn't feel comfortable asking questions in front of the group, if you guys get a chance, it really would help us out as an organization. If you enjoy your podcast, get on REIA Radio on whatever platform you listen to. Give us a 5-star review. That would help us tremendously. And if you love Omaha REIA, getting on Google and give us a written review on there. We have lots of 5-star reviews, but we had one person leave us a 1-star review. And so that brings that down just a little bit. And boo. But if you guys give us a written review on there, that really helps us out. We appreciate you guys so much. And if you could, about 10 minutes here, we'd like to have the room cleared out so the staff can come in and clean up. And we just all go into the other side. So we appreciate you guys. Thank you so much. If you want to check us out, we're on REIA Radio on YouTube, and you guys can watch a recap of this. So thank you guys. Have a good night.